Okay, hi everybody. As I said a second ago, this is Emily Motter, the event strategist at Hospitality Minnesota. We are excited to have y'all join us today to talk about the CARES Act. So first I'm going to introduce all of our panelists. First, we've got Ben Wogslin from Hospitality Minnesota. Ben is our Government Relations Director. And today Ben will be jumping in just to kind of help add any Hospitality Minnesota specific context as needed. Next, we've got Chris Wittich, who is a partner at Boyum Barenscheer. Chris, I will summarize it by saying Chris is a tax expert, so that is great. And then lastly, we've got Nick Swedburg, also from Boyum Barencheer, and Nick specializes in restaurants and breweries. So a couple housekeeping notes. The first thing is we've got two ways to participate today. The biggest one is the Q&A module. So for the folks that are signed on online, at the bottom of your screen is a button that says Q&A. So if you have any questions that you want to ask any of our panelists throughout the course of the webinar, hit that Q&A button and type your questions in there. And then those questions will either get fielded during the course of the webinar if it makes sense in that moment, or at the end during our Q&A section. Then there is a feature of the Q&A that is really helpful, which is upvoting. So basically what that means is if there's a question that someone has asked and you have the same question, you've got the opportunity to upvote that. So basically if we see one question has multiple people who all want that answered, that will help us notice it better than if multiple people submit the same question at the same time. So just make sure you take a second to look through the Q&A and see if your question's already been asked. And then the other option we have at the bottom is the chat. And so the chat is basically an opportunity for ongoing conversation throughout the course of the webinar. So I'll be keeping an eye on the chat if there are any questions that pop up there. But I would definitely suggest that if you have questions, to send those over to the Q&A. So with that, I will turn it over.
Thank you very much, Emily, and thank you so much, Hospitality Minnesota, for having us. This is a huge topic, and Chris and I know Ben has also, we've spent and invested a lot of hours in the past 7, 8, 9 days since it passed. Has it been that long? Yeah, roughly, to try to learn this and read all the new guidance coming out. So we're excited to talk through a lot of this and hopefully provide a little clarity and guidance. Here's just a very brief agenda. Don't need to read through this whole part, but on this very first section, it's going to be just practical advice and some initial discussions around the different SBA loans that are out there. There's a lot of confusion because there's a couple different programs, and hopefully we'll be able to just differentiate those and give you some good tips for each one. So on the agenda, of course, just a general overview of the loans that we do have, some quick regulation updates, just the 3 different phases that have already come out, and a brief discussion on what we hear is coming down the pipeline. Some financing options, documentation needed, and then we'll go into a little more of the strategy, and which involves a lot of those things over on the right-hand side. So the very first phase that started was signed on March 6th. This was the Coronavirus Preparedness and Response Supplemental Appropriations Act. Sorry, a wickedly long name. It mostly just funded a lot of our health resources, getting a bunch of money into Department of Health and Human Services. Also really heavily funded the SBA's Economic Injury Disaster Loan Program, which Minnesota did eventually get accepted into that, and we will cover that in a little while, and did a few other health-related things to Medicare to allow for telehealth services and a few other small things like that. That got followed up 2 weeks later with the FFCRA, Families First Coronavirus Response Act. That actually just took effect on April 1st, and it hits businesses for under 500 employees and puts in some funds for people that are providing paid leave for their employees that were affected by COVID-19. That's a little bit beyond the aspect of this webinar exactly, but there's some very good resources out on that. There is a webinar this Thursday that should be covering a lot of this on our website, and you can hopefully find some more info on that soon. And then number 3, the big one that we're going to be focusing a lot on today is the CARES Act, the Coronavirus Relief Bill. This one was just signed on March 27th. It's $2 trillion, which is unheard of in the past of stimulus bills, and it's for everybody. They almost specifically wrote this so it hits almost every organization in some way. There's a few that are left out, but for the most part, it affects individuals, businesses, nonprofits, and governmental entities. So it's almost everybody. There was so much rush to get this done, which is great. I'm glad they're moving. But of course, the downside of that is that our guidance is not very well documented. There's still a lot of open questions, which we'll be very blunt and honest about it. I know we've already talked to Ben about several of these, that there's just question marks that we don't really know what's going to happen until we kind of get there. So you'll be learning along with us. And it affects unemployment, there's loans, there's some payment deferrals, payroll credits. There's a lot of different stuff in this bill. It was funding NASA and funding different hospitals. So there's a lot of money, a lot of moving parts in the bill. We're obviously narrowing this down heavily to be more focused on what we think will directly affect all of you. So these are the main 3 financing options we have available to us right now. In general, it's for companies with less than 500 employees. One great asterisk by that directly affects this group is that affiliated businesses were normally in there. So if you had 6 different entities and between all 6 you had 1,000 employees, you wouldn't have qualified. But they put a special exemption in for people filing under the Food Service NAICS code. It's a fancy SBA labeling system. So if your code starts with 72, you are exempt from this. And then they look at per location. So each individual standing entity is what they would look at. Your NAICS code is on the front page of your business tax filing. If you aren't sure what you're filing under, and the first one, and probably the biggest one everyone's heard the most about, is from the CARES Act. It's abbreviated as the PPP loan. It's the Paycheck Protection Program loan. That's a big one to write down. These 3 really are the ones that we'll be referencing and using acronyms on, because they're just way too long to actually say every time. So if you want to just remember the PPP loan, we'll cover that in detail. The SBA Economic Injury Disaster Loan, or the EIDL, and then the Minnesota Deed Small Business Loan. This one was very specific, and it only applies to industries that were shut down by executive order, which again is a lot of this webinar base. And we'll focus on that one. There is certified lenders. It does not go through banks, and it's not a self-application. It goes through a list of approved lenders. And from my experience with most of them, the ones that are serving greater Minnesota counties have some capacity left, but they're very specific. They're only going to serve the counties that they're supposed to serve. The ones serving the metro got inundated, I think, a little harder than Minnesota Deed was expecting. And we've had a few of them basically hold their hands up and say, we're done. You cannot send us any more. We already can't get through what we have. So we've been trying to reach out, and it's just important to make sure to talk to the one that you want to work with and see if they're able to take you on. I know there's still ones in the metro that can do it. It's just you got to be picky and find out which one that is. That one, these were loans that are from $2,500 up to $35,000. It's 0% interest and paid back over 5 years. There is payments don't start for 6 months, so there's a little bit of leeway there. And the bullet point on bottom is awesome, but we don't know a lot about it. It says partial forgiveness up to 50% may be available. Still working on exactly what that process is going to look like. How do we get it 50% forgiven, or is it just 50% forgiven? We don't know. Hopefully we'll all learn together on that one soon. There's a lot of asterisks from every governmental agency just saying further guidance to follow. So this is just a side-by-side of the other two, the two federal programs. On the left is the SBA EIDL, and on the right is the big CARES Act Payroll Protection Program loans, or the PPP. So starting with the one on the left, this one has been around a little longer. Minnesota was declared a disaster area, I think in mid-March. I'm not positive on the date, but we've been able to apply since then. This was done directly through the SBA's website, and they got absolutely clobbered with people trying to apply. Minnesota got approved to apply, and so did a few other states the same weekend, basically. So that next Monday, their website completely bombed, couldn't get anything done. They did revamp it since and have streamlined it to a short application form that has been just it takes 15 minutes roughly, and then they're supposed to reach back out asking for additional information. They're definitely bogged down. Both of these loans together do technically all hit the SBA, and this is way more than the SBA has ever funded in their lifetime. So this has been a lot for their staff, I'm sure. They're running very far behind. But on the EIDL, like I mentioned, that's directly on their website. It's a quick application. They'll follow up with more information. It's up to $2 million, and there's a $10,000 grant/advance they're offering to try to get cash into people's banks right away. I personally have not seen anyone in my client base get that yet. Most everyone's requested it, and it's supposed to be very quick. Maybe it'll come in now early this week, but I have not seen any actually hit. So this one is up to 30 years at 3.75% if you're a for-profit entity, or 2.75 if you're a nonprofit. So this one on the left, the EIDL, is truly business debt. This one's going to be on your balance sheet. You're going to owe this back. It is a long-term, or could be a very long-term, at a good interest rate, so it might be very worth pursuing. And there are some accepted uses of funds, and we'll kind of get into the interplay between these two loans in a further slide, but it's probably more for working capital or a few things like that. There is no guarantee up to $200,000. It used to be back all the way down to $25,000, but they did up that to $200,000. So no personal guarantees from the owner unless you're over $200,000. But they are going to look for collateral once you get over $25,000. What that is per entity is going to just be a SBA decision, and it's going to be based on your individual company. So we won't dive into that too much. And there's no forgiveness on this loan, but there could be on the advance. The $10,000 grant will most likely be forgiven. And that one is open. You can apply now. You can go to that website. If you applied really early and got through their really long online form, it would really pay to go back and reapply to get that $10,000 grant that they're trying to push out much faster. Then on the right, the big one that everyone's been hearing about, and there's so much misinformation and confusion out that hopefully we can provide a little clarity, is the PPP. This one is actually applied through an SBA certified lender, which most banks are, or many banks are. So definitely reach out to your existing relationships right now. We've gotten a lot of updates from some of the largest banks that they're already they won't process for non-existing customers. So it's definitely going to pay to leverage your relationships with the banks you have and try to get your name in queue with one of them. This one is calculated, so the total amount they'll give you is 2.5 times your average monthly payroll. And I believe we've seen conflicting dates, but the most recent date, I believe we've been going with calendar 2019. Chris and Ben can weigh in if they've seen differently later. I'm sure we can cover that. But it seems to make sense just then we can use W-2s and use more payroll forms that actually fall into a calendar year instead. And that average monthly payroll is actually not a completely cut and dry calculation. They do add in a few things over and above just normal payroll. They will add in some group health benefits and some employer contributions to retirement plans. And that again will be covered a little later. This next bullet actually just changed. This is the new information, but in the classic of how things have changed, this bullet point has gone to 3 different things in the past week. The latest guidance we've seen from the SBA directly is that these loans, if they aren't forgiven, which is a big discussion, whatever is left, you'll owe back over 2 years at 1% interest. And this PPP is very specific on what it can be used for. This has to be used for payroll, rent, utilities, and interest on a mortgage. There's also a strange calculation that it can't be 25% or more for those other 3 items. They want it to be mostly payroll, and we'll try to provide a little more clarity on that. There's no guarantee on this one, no personal guarantee on this one, so we're not signing up as the owner to guarantee this debt, and they are not looking for collateral. This one is truly they're trying to get paychecks back in the hands of employees, and that's the goal on this one. And there is forgiveness. This is the big piece that everyone's been hearing about. It sounds like free money, and there is a portion of it that very well could be, but there's a lot of asterisks by that and a lot of discussion to have with your professionals to make sure you know everything that could come out of this. And they just started accepting applications on Friday. The April 3rd date was for S Corps, C Corps, well, pretty much everybody but sole proprietors. I believe that's the main carve out. And that application that started on Friday definitely did not go super smoothly. The SBA's website for banks to submit completely crashed. Not too many loans made it through. The latest info that I heard was that about 10% of the funds have been set aside or earmarked for the applications that made it through, which is much less than we had originally heard a week ago. They thought funds would run out in a few days. That's definitely not the case. Please don't panic. We don't need to just get all of our stuff together and throw in an application. It might actually pay to wait a little bit and just do this much more thoughtfully and slowly. So,
Nick, could I just add one point?
Please do.
On the last page, the 3rd bullets indicated that the interest rate is 1% with a 2-year payback. It's our understanding currently, though, that the first payment for anything that's not forgiven has a deferral for 6 months. So you wouldn't actually have to make payment on the loan for at least 6 months for any portion that is not forgiven.
That is a great point. Thank you for adding that. That is true. We fully agree. So here's a quick list, sorry, none of this is super quick, but here's some of the items that the SBA EIDL has been asking for. A lot of these, when I mentioned this first one, the business application form 5, that's just the SBA specific one. A lot of these are right on their website. The confusing part for most is that if you haven't applied before and you go apply now, you're going to get into the streamlined application, which isn't asking for a lot of this up front. But then at the end, it'll give you links to a lot of this and say, we'll be asking for it. So good to start pulling everything down and start filling out as much as you can. Some of it's a little confusing, but just take your best guess and reach out to any professional that you work with to get the rest of it filled out accurately. They do want a few things that can be difficult. Is they want what's called a 4506. It's they're going to ask the IRS for a transcript of your tax return, and they want that for every owner over 20%, which that can be quite a few people, obviously. So good to have those ready, that they're going to have to be physically signed. They are going to want the most recent tax returns. They understand that 2019 very well could not be filed yet, so they have been accepting 2018. And in that case, then they want financial statements for 2019. And actually, I think either way they do. They'll also want personal financial statements for all the owners in case they do get a personal guarantee in there. And they want some liability information, like what are your current term debts? How much are you having to pay on a month-to-month basis? And they'll just want a few other things that they're going to ask about. So just good to have a lot of documentation ready and save copies of it. Some of it kind of piggybacks the application for the PPP form. The official application for the PPP has kind of been all over the place. So we, in addition to this EIDL information, which hopefully as you're applying, you just save all of it in duplicate, adding on these items is what you will most likely need for the PPP. We have from several banks kind of a complete list, and the SBA has been putting out some better guidance. I just haven't gotten a full update on what that entails. They're going to want more payroll items for this one. There's a big calculation, like I mentioned in the beginning, of your average monthly payroll. And for that, they want to see copies of officially filed forms, which makes sense. So reach out to your payroll provider. They should have all of those very readily available to you. And they'll want a payroll report to not only calculate the form, calculate the total loan amount, but also to see backup for how much you're paying people. Many of the large payroll companies have put out PPP calculators, so you can run a report for whatever time period you want. We've been using calendar 19, and I believe that is the latest guidance, and have been using that to come up with it. The big trouble is of the 4 companies we know of that have released these, each one calculates slightly differently. And that's where there's some ambiguity in what they want to calculate. And so people are reading it differently. We think we have a fairly good one directly on our firm's website. There's some links to it at the end, and we'll share it, of course, with Hospitality Minnesota. And it's the one that we understand is the most current, just using the data from the SBA and some of the banks grouping them together to try to come up with what we feel is the most accurate calculation as of today, but that truly is changing, not weekly, I would say. And lastly, they're going to want information. If you do match retirement, they're going to want confirmation that you do that and want a report to show it, and also for health insurance premiums if you have that. And next up is going to be some more kind of strategy and consideration around this loan. And I'm going to hand that over to Chris Wittich, who we talked about earlier. Chris?
Hey, everybody. We know a little bit about the PPP loans, but we do need to understand what is the strategy around these and what are the things you want to be thinking about and what are the things you want to be doing instead of just applying as soon as you possibly can. In general, these appear to be very generous provisions and there's very little downside. As Ben was mentioning, the worst case scenario is that you get a loan and they defer the payments for 6 months and then they charge you 1% interest. That's still a pretty darn good deal. And if you don't use the money for the correct type of expenses, then you should not be using the money at all, and you'll still have all the money. So another worst case scenario, you get a loan of $100,000 and your business remains totally closed and you don't bring anyone back on payroll, and for the next 6 months, your business is still closed. You haven't spent any of the money on the payroll, so you could just give it back. And they're going to charge you 1% interest on it, which is not too bad. So I do think this is where a lot of people are focusing, and they should be. But there's some strategy around how and when do you want to apply for this, and what kind of things are you going to use it for. It's definitely, whoops, there's the cat, my coworker. Sorry about that. So for businesses, when you're looking at if you've done a layoff or you've already furloughed people, you can apply for the PPP loan now, and then just think about, you need to be intentional about when you want to bring people back. And I think the best way to do that is to be honest and communicate with your team and with your employees. I mean, I think they understand these unusual times we're going through, and certainly be mindful and planful about how you're going to go about this. The bullet point on the right there, bring the team back by June 30th. So part of the forgiveness aspect is that you need to retain all of your people, and you basically need to pay them the same, and then you need to get your count of employees back up to the same level that it was in February by the end of June. So they understand that a lot of businesses have already furloughed people. They've already laid people off. This is the PPP money is to try and get you to bring them back. And so there's a measurement on June 30th for if you've brought them all back by then, you are at least eligible for the 100% loan forgiveness, or close to 100%. In some of the calculations we've been running, it seems like it might be difficult to truly get 100% forgiveness, but I do think it could be mostly forgiven if you can get people back by June 30th. So the way the PPP loan works is you get the loan, and let's say it's $200,000 based on your payroll. Then there's going to be an 8-week period. It's called the covered period, and that's when you're going to measure these costs. So payroll costs are allowed, and then there's the rent and utilities. There's some limitations on those, but it's those costs that occur during the 8-week period after you get your PPP loan. And you also are keeping in mind this June 30th date, trying to get all of your people back, ideally, by June 30th. And so one of the things that I've been working on the last couple of days is, if you have a business that's entirely closed and you get a PPP loan May 1st and you bring everyone back on payroll, if they're not generating any revenue for the business, I'm not sure if there's a whole lot of incentive to do that. If it's mostly going to be, I mean, if it's almost all going to be forgiven, essentially you're using free money to employ people, and that can be great, but it's not really helping the business. It's helping the employees maybe, but it's not necessarily helping the business if they're not actually doing any sort of revenue generating value added work. If you're just paying them to do nothing, I think the potential is there to maybe delay. And so if you were to like delay until June 15th, because you know at that point my restaurant is going to reopen because we've gotten the all clear. So we think we're going to be good to go maybe June 15th, or if it's June 20th, or however that shakes out. Maybe you delay the PPP until then, and that's when you employ people. Business might be slow or slower during that first 8 weeks that you're reopened, but at least employees are going to be generating some revenue for the business. So I think that can be an attractive strategy in conjunction with your desire to have everyone back in the fold by June 30th. So when we're looking at the forgiveness, there's a lot of complexity in trying to calculate how the forgiveness works. There's a couple of limitations. One is this full-time equivalent requirement. So if you had 15 employees before, and on June 30th, you only end up with having 10 back, you're going to have a maximum of about 2/3 loan forgiveness. It's a little more complicated than that, but in general, you are not employing 1/3 of your people, so 1/3 of the PPP loan is not going to be forgivable. There's another requirement that says you also have to pay people a similar amount. So if everyone was making, let's say, $50,000 a year, and you bring them back at a salary of $25,000 per year, that is a more than a 25% reduction in their wages. And so you're also going to run into not having all of that PPP money be forgivable. So you're keeping in mind that your goal is to employ the same number of people, but also at the same salary level. You don't want to be cutting their pay in half and bringing them back, because that's not what the goal is. The goal is for you to bring them back and pay them their full amount. The rules get a little different if people are making more than $100,000, but for those making less than 100,000, both of those things are going to apply. And so the calculus becomes very complicated in trying to figure out what's the right approach, and in what situations is this PPP loan gonna make sense. Oops. So another part of our playbook here is just looking at, in the big picture, what does the business want to do? And so probably the most important aspect of that is a 13-week cash flow tool. So we've got one of these on our website that we like to use, but you really need to be intentional about planning out your cash flow. What does it look like when the business is closed? What might it look like if the business reopens or partially reopens? And so you come up with a plan that takes all of this into consideration. You're looking at the revenue of the business, but also some of the fixed costs of the business, and factoring in that PPP in figuring out when's the right time to bring people back and what are you going to be able to afford to do. The next step is to apply for the SBA loans. The PPP is a great deal, but certainly, as Nick was talking about, the EIDL loans can work as well. You want to review some of the unemployment issues with furloughing or laying off people. There are also, if for some reason you don't think you're going to get a PPP loan, or you don't want to go that route, I think it's very attractive, but if for some reason you don't want to go that route, there's some other tax credits available, which you'd want to keep in mind. And just looking at some of the other factors that go into your cash flow, some of those other tax credits, payroll tax credits, payroll related credits, they can impact what your cash flow is, especially on the employer side of payroll taxes. But certainly understanding the new tax law can impact, and maybe the impact there is just that your business is not going to need to make estimated tax payments, so you can save that cash flow. Or maybe the impact is that the owner can do less withholding on their wages because they're not going to owe tax personally. So when there's less withholding, that means there's more cash left over to the owner. Certainly you would like to keep selling and marketing your business if you can, if it's open, if it's available. And I think communicating with the team and just letting them all know what you're thinking about and what's going on is important. As we say, you want to plan for the worst case scenarios, but you certainly are hoping for the best case scenario, and we're all hoping that business gets back to normal sooner rather than later. But looking out at a 13-week cash flow, you could even have a couple of different scenarios where if we reopen this business June 1st, this is how it's going to look, versus if we can reopen May 15th, versus if we're still closed come July. So you want to be looking at running a couple of different scenarios, I would say, just so that you're covering your basis and you're planning for the worst case scenario. The 13-week cash flow tool we've got on our website, I mean, some of these things are obvious and some are a little less so. So I would be looking at some of the hidden sources of cash. Sometimes the business will have like a cash surrender value on a life insurance policy. That can be a great thing to tap into at this time. And we'll get into some of the other tax breaks, especially with retirement plans that are coming up. That'll be a little bit later, but looking very closely at all the bills you have and calling the people that you owe money to and seeing if they'll give you some terms. We've heard of several clients having a great success getting loan payments deferred, getting credit cards deferred, getting some of their bills or their rent deferred. And that can be a great way to generate some cash, or save some cash, I should say, in the short term, is just looking at all of those things, in addition to certainly the payroll and the benefits that you're providing. But I would do a deep dive and really scrounge and look at the cash that's available to make sure that you're maximizing it today, because it's the most important thing to get through this time. On the employees and the payroll, as you're factoring them into the cash flow analysis, that 13-week forecast, certainly looking at a cut in pay for the owners, as I mentioned, just reducing the withholding for the owners can be a great way to go about saving some of the cash. But certainly a lot of clients, a lot of businesses are looking at layoffs right now. They're looking at furloughs. And I think just communicating with employees that, hey, this is the furlough. We're looking, maybe we'll bring you back as soon as we can get this PPP loan, or maybe we'll bring you back like a week before we think we're going to reopen based on the governor's orders, just so they have some idea. And when you're looking at laying people off, you should also be aware of what the unemployment benefits are now. So unemployment has changed quite a bit in terms of who qualifies for state unemployment. And then the feds are adding $600 a week to that unemployment. So I know we've seen several clients where they have employees who actually make more on unemployment than they would working at the normal job. So keep that in mind. The owners are trying to look out for the employees, but at the same time, you got to know what the other options are for the employees. We'd all like to be doing business as usual, but in these strange times, you really got to understand the other side of it and understand what are the employees looking at, what are they dealing with. The payroll tax credits, and some of the deposit extensions, we haven't talked about that a lot, and we probably won't. If you get a PPP loan, you are not eligible to do those. And since we think the PPP loan is pretty great, I think the PPP loan is where people are going to go instead of some of those payroll tax credits. But I know we do have a webinar on Thursday at 11 a.m. that's going to dive way deep into like the unemployment and some of the employee issues in addition to those payroll tax credits. And so when we're going through all the cash flow, you really got to look at some of the small things. So the fixed payments, if you can get them deferred, if you can adjust owner's comp, the 401k loans, I'll talk about that a little bit more. And then just talking with vendors, being realistic about what you can pay, prioritizing them, making partial payments, asking for deferments whenever possible, and see if you can get it in writing rather than you called the banker, they said over the phone, yeah, sure, we can probably kick the payments 3 months, see if you can get it in writing, just to sort of cover yourself on the back end. So, I mean, those are the kinds of thoughts we have around strategies with the PPP and some of the cash flow. So I'll turn it back to Nick for a little bit on a sampling of the unemployment.
Thank you so much. Like Chris mentioned, we're not going to go super deep into unemployment. One of the main reasons we wanted to hit it is we know this audience, we have a lot of high employee counts. Basically, we have campgrounds, hotels, lodging, resorts, restaurants. Sorry if I left anybody out, but there's a lot of employees there. And for most of us, everybody's already furloughed or we've already cut back. And we wanted to cover this just to talk about what your employees are seeing, but also if there are options for you. So under the new CARES Act, the federal government added $600 to unemployment at the state level. What this means is, and it expanded, sorry, I'll hit that first, but it expanded to allow benefits for individuals that normally weren't allowed to get unemployment. I'm going to go very Minnesota specific because we're Minnesota hospitality, so why not? And that's where we're based, so that's what we know the best, is in general, self-employed individuals were not eligible in Minnesota. And if you were the sole owner of an S-Corp, or sorry, just unowner of an S-Corp, unless you had specifically asked the state to tax you on unemployment, you probably were not covered. It was pretty rare in the past that S corporation owners were covered by unemployment because it was a lot of money to pay for an owner, and almost always they weren't eligible anyway. So this was a special exemption that is a good benefit for everybody. I'm not going to read this. I know this is a lot of info, but it's basically saying as an individual or an owner of an S Corp, we had to certify that we were hurt in some way or unemployed because of COVID-19, which that's not extremely hard for anybody at this point. These first ones are for anybody who was directly affected, which thank goodness as of now, I don't know anybody, and hopefully your families are all safe too. But this is for anybody directly harmed. The other certifications are a lot more statewide, I guess I would say, is you're unable to reach your place of employment because maybe you aren't essential, so you aren't able to go in. You can't make it because your kid's daycare or school is canceled. Your place of employment is closed, and there's a few other ones like that. But at the bottom, it's you're self-employed, you're seeking part-time employment, you might actually still qualify, which was not the case just as of a few weeks ago. Paid benefits cannot exceed 39 weeks. That's the last point here. And it doesn't count people that are able to work from home. Like, as you can tell, all of us are with our cats running across our computer screens, and my kids, luckily not yelling in the background at the moment. But if you're able to work from home, you do not qualify. And there's another unemployment comp under the Fed that I won't touch because we won't get that. So here's the part that hit the CARES Act. There was an emergency increase of $600 per week for up to 4 months, ending July 31st, to people receiving unemployment benefits. This is still through the state, so it's not a separate application anyone has to do. It's not like we're going to forget to get it. It's supposed to be automatically added to everyone's unemployment check. I believe it was supposed to start last week. I never got confirmation of that, but it will hopefully for sure be this week. The $600 ended up kind of being strange for Minnesota because we already had one of the higher unemployment bases. There are states in the South, we were actually just talking and doing a webinar for someone down in Louisiana and Florida. Their unemployment benefits are extremely low compared to ours. Theirs were in the $160 range per month, and Minnesota's normal average is about $450. So then with the increased amount from the Fed, it got up to about $1,000 a week. I'll show a slide here in a minute kind of doing a calculation, but several workers on the lower end of the total compensation they receive actually could make more on unemployment in the short term. Of course, it's only it doesn't last forever. It does run out, but it actually could give them a little pay bump. So this is just an example page. This is for full-time employees. We didn't get official word in the CARES Act, and Minnesota unemployment doesn't have official word whether that $600 gets prorated if you only work 60% of the time and you get 60% of the benefit. Do you only get 60% of the 600? We don't actually know. I would assume that's the case, but I have not seen anything yet. But if you look here, there was, even almost up at that $75,000 range, you could be making about the same amount of take home. 50,000 for sure. I think it broke around the 64,000 was about even. So for a lot of employees, they're not in a they're not in a terrible spot. Of course, nobody wants to lay off and furlough people, but just know they are getting a pretty good benefit from the federal government. And hopefully a lot of our employees that we did have to furlough are still doing okay with this additional increase. So the big update is that part of the CARES Act is that self-employed individuals will be eligible for unemployment. And Minnesota is, of course, following this guidance. But even as of this morning, the Minnesota unemployment website just says, we don't know what to do with you, small business owner, so you can try to apply, but we don't know what benefits you get yet. They're still waiting for guidance from the Fed on how they should cover this. This portion of the bill is supposed to be covered by the federal government and not come out of our state funds. So they're being very careful and want to make sure that they're spending their money correctly. And due to the huge number of applicants, it came out in some news broadcast that self-employed individuals are able to get unemployment. So there was a huge rush on the Minnesota unemployment website, and they were not ready because it hadn't been given guidance and they didn't know how much to pay. So they had to basically shut that off and set those applications to the side. They're hoping they're going to get guidance this week so that we can start having self-employed individuals get covered, but we don't really know, unfortunately. They were so inundated, they had to switch to a apply on a certain day methodology, even when you apply online. So again, I just checked this morning that their website still looks at the last digit of your social security number, and that's the day that they want you to apply. I don't remember exactly what the dates are, but once you start getting into the application, the very front page will tell you, if you aren't this number, we're going to reject you. So don't apply unless it's your day, or they might auto reject you. And if you are self-employed or you own your own business and maybe wouldn't have been covered in the past, but if you are shut down and you might qualify, you can try or at least get your application started. And there's a box to check that you're self-employed. And as long as you hit that, they said they're supposed to hold that aside and get the process going once they get acknowledgement. But your guess is as good as mine, really, on how they're going to handle that once it opens up. So the very last section we're going to hit before the Q&A is some of the tax provisions that affect every small business owner and a lot of us just as individuals.
Oh yeah, let's talk about taxes. This is my jam. I've spent a lot of time reading about these SBA loans the last week, but taxes are more fun, I think. So as we look at taxes, we're going to cover a couple of things. One of the big things that I want to mention is the stimulus checks, because that's getting a lot of publicity, obviously. So the stimulus checks, unfortunately, is far more complicated than it should be to figure out how much you're going to get or when you're going to get it. They really have not put out any guidance on exactly when they're looking at these, but I've done a separate video on our website. It's about 10 minutes trying to explain all of it, but it'll either be based on your 2018 or your 2019 return, and probably get checks next month or in the next few weeks to 6 weeks, I would guess. And then if you didn't get it because your income was too high in 18 and 19, you can still get it when you file your 2020 return. So all hope is not lost, but you're going to have to wait. If you're going to get with your 2020 return, you're really not going to see that benefit till like March or April of 2021. Retirement plan changes. So I've alluded to this once or twice, and I think this is something that has not gotten enough publicity around these plans. So there have been some dramatic changes to what you can do with your retirement plan. There's a new thing called a coronavirus qualified distribution, and they define what that is. And it's people who are directly impacted, meaning they have it, a family member has it, or they're taking care of a family member. But then it starts to get more broad, and it says experiencing adverse financial consequences of being quarantined or furloughed or laid off. So this is where I think business owners, where their business is closed or their business has dramatically been reduced, I think they can potentially qualify for this. And so how does it work? Well, it's up to $100,000. That's a maximum you can do. And the way it works is you take a distribution from your plan in 2020. It goes from now until the end of the calendar year. So you take a distribution of up to 100 grand. So this could be like your 401k or an IRA. You take your distribution of 100 grand. There is no 10% penalty for the people who are too young or don't meet one of the other exceptions. So there's no penalty, which is good. And then starts the fun stuff. So the fun stuff is you do not have to pay tax on the 100,000 right away. I mean, you could do a smaller amount too, but for this example, let's just go with 100,000. So you take out 100,000 tomorrow because you're like, man, we need cash immediately. You're going to get taxed 33,000 on your 2020 tax return, which realistically means it's like April of 2021 when you're paying that tax, and 1/3 of it, so it's another 33,000, that'll show up in your 2022 or 2021 tax return, and then 1/3 of it on your 2022 tax return. So it's spread over the 3 years, and it'll be spread evenly across those 3 years. So that's a tremendous deferral. In addition to avoiding the penalty, you get this great deferral. And then they threw in another aspect of this, which is once again unique, is that if it really is a short-term thing and you need the cash, but then maybe you end up getting an EIDL loan in a month, and you're like, oh, that's great, the EIDL loan can help fund some of these operations. I don't need this money anymore, and I'd like to put some of it back. So they've made it so that during that 3-year period when you're paying it, or paying picking up the income, you can put the money back and it will count as a rollover. So normally a rollover has a very short period of time, and now they're saying if you take out a coronavirus distribution, qualified distribution, you can put it back within the 3-year time frame and have it be tax-free. So if you took out 100,000 tomorrow, and then by November, business is great again, things are going super, and you're like, well, I'd rather have this cash in my retirement plan where it's growing tax-free and hopefully growing because the stock market has returned, then you can just put it back and you have no income to pick up on your 2020 tax return. One of the things that's unclear about this is what happens if you put the money back in 2021. So you took out 100 grand, you picked up 33 grand of income on your 2020 return, then you put all the money back in January. It's unclear if you're going to get a deduction then in 2021, or if you'll have to go back and amend your 2020 return. So more guidance is coming on this. I mean, that's a common theme, that more guidance is coming, but it's a unique opportunity that really, I mean, 100 grand of cash, if you've got it in your retirement plan, it can be a very quick source of cash, and then tremendously flexible in terms of when you put it back, if you put it back, and how you pay tax on that if you decide to keep it. Something else I'll just throw in there is that the RMDs are waived for 2020. I'm not really sure why they did that, but you just don't have to take money out if you are already retired. Charitable contributions, I will mention just briefly because I think it has the potential to be a long-term thing, but they're going to allow a $300 deduction for cash contributions for people who do not itemize. So a lot of our taxpayers now are not itemizing, even though they used to, sort of under the old rule. So the new law, people are not itemizing, so you'll get a $300 charitable contribution for cash contributions only. Student loans, I'll mention briefly. It's a little bit of a tax thing, a little bit not. There's an employer fringe benefit where they can pay for tuition. That's basically been expanded to now include student loans, which is nice, but that's only for this year. But especially for like the kids of maybe employees or the kids of owners who have student loans for going to college, the CARES Act suspended their principal and interest payments until September 30th. In theory, you don't have to do anything, and they're just going to automatically suspend these payments. I've yet to see if that's actually happening, but in theory, you don't need to do anything. They're just going to defer these 6 months. Loss limitations. So I think this one has the potential to matter for businesses, but we've left it at the end because it's going to take a long time to get this cash. You could get a lot of cash potentially, but it's going to take quite a while. So they've lifted some of the limitations on net operating losses and how much loss you can claim in a year, so that you can now do a 5-year carryback. But that's going to require amending your tax returns and claiming a refund. Those refund claims take several months, and that's when the IRS is functioning. And right now, the IRS is only sort of functioning. We had one agent tell us they were operating at about 30% capacity right now. So filing amended returns, it could take a while to get your cash, but it's certainly out there that some of these rules have been relaxed. And this one it works in conjunction with those. And I think this has some unique opportunities with it. So a qualified improvement property, that's going to be leasehold improvements. It's going to be qualified restaurant improvements, and then qualified retail improvements. They all get lumped together in this category. Part of the Tax Cut and Jobs Act was to treat these as, it was supposed to say 15-year property, which would allow you to get 100% depreciation on them. They messed up the tax law, and so it instead ended up with 39-year property. Well, now they're fixing it. And so what does that mean? It means for like a restaurant that had a bunch of improvements in 2018 or 2019, you could amend your return to change the depreciation on those items and potentially create a very large loss. And now that loss, you can carry it back. So this goes hand in hand with some of the loss rules. But you're really looking at qualified improvement property. So leasehold improvements, retail improvements, and restaurant improvement property. There's been a big change where you can now get 100% depreciation on them, and they're retroactive. So you can amend 18 returns. If you're already filed 19, you can amend that, or you could just fix it on your 19 return if you haven't yet filed it. So that's a huge dollar amount. But then it works in conjunction with the loss limitations, where you're still going to end up filing an amended return and waiting potentially several months to actually get the cash, to get the refunds. But it has the potential to big dollars. So I would definitely keep that in mind and be looking very closely at the assets, the fixed assets of your company, and see if you had any of this kind of qualified improvement property. So with that, I think we can open it up for questions.
All right, I will go through some of the questions we've gotten in the Q&A, and Nick and Chris and Ben, you guys can have at it. So the first question that we've gotten is from Julie, and she's asking if the first step in the EIDL application is getting application confirmation. She applied and received confirmation. Oh, hold on. I received confirmation. From there, can she go on to ask for up to $2,000 with no personal GTD needed?
Yeah, I can jump on that one really quick. You're right, this has been very confusing. When they changed the website, they went to this streamlined form that's really short. It kind of just feels like you didn't do anything and your application's out there. That's just the initial step. They are going to reach back out to go over your total amount you qualify for. So, maybe up to 200,000. I like you picking that number because then we're not under personal guarantees. But that's just step number one. They're supposed to reach back out. They're backed up, and I haven't seen them get back to you too quickly, but hopefully they'll reach out pretty fast so you can get that next step. But I'd get your documentation in order because they're going to want all of it, and they want it all complete and ready right away.
Okay, next, we've got kind of a pair of questions. One is, what recommendations do you have for PPP loans if you bank with Wells Fargo? And then the second part of that question is, this person has heard that the PPP loan forgiveness requires full rehire of employees. Are there any exceptions for the hospitality industry where, the businesses are shut down?
So on the Wells Fargo side of things, that's depressing. I would find a new bank is what I would do. because I'm not sure you're going to get it through Wells Fargo anytime soon.
And do you want to explain why really quickly?
Yeah, so we've heard from people at Wells Fargo, and actually Wells Fargo has published some of this in more broadly, is they say they've basically capped the amount that they're willing to do, and they've already met the cap. So although there's certainly money left at the SBA, there's plenty of money at SBA. Wells Fargo's basically said, we're not willing to do any more. We feel like we've done enough. We've taken enough risk, I guess. And it doesn't look promising. I would find a new bank, and based on what we've seen, I would try and find a smaller community bank. I think your odds of getting a loan through there are much better than going to a new bank that's also a big bank. A lot of the big banks are not taking applications from people who do not have existing banking relationships with them. And so, I mean, you can try Bank of America, but Bank of America is not going to take your application unless you already bank there. So I think one of the results of the way some of these bigger banks are approaching it is they might lose business to smaller banks who are willing to do these things. At some point, a small bank will maybe cut it off as well, but I think your odds are much better with a smaller bank.
Chris, do you need to have like a pre-existing relationship with a smaller bank, or can you just find one?
It depends on the bank, but generally we found that the small banks are willing to work with you, okay, and the big banks are only willing to work with you if they're already working with you. But each bank can come up with their own requirements entirely, which is what we're seeing, is that the banks are just all over the place in terms of what they think qualifies as PPP loan costs that go into it, how they've structured their applications, what kind of documentation they're asking for. So I think to Nick's earlier point, your best bet is to be as thorough as possible and gather all of that stuff, because we've seen a bunch of applications rejected for not having enough information because the banks didn't even ask for it. And so what was the second half of that question?
The second half of that question was, the asker has heard that the PPP loan forgiveness requires full rehire of employees. Are there exceptions for the hospitality industry where the businesses are currently shut down?
Yes, that is pretty much true, and no is the answer. Unfortunately, there's no exceptions, but that's why it's measured at June 30th. So I think there's the potential to have changes to the PPP. I mean, we're seeing changes almost every day to the guidance, but realistically, if they dole out this PPP money to businesses that are still closed on June 30th, I think there's got to be more guidance, because paying people to just do nothing isn't super productive for anyone, really. But currently there are no carve-outs on that.
If I could chime in here as well. So there's a lot that I think the loan forgiveness provisions in the CARES Act for the PPP is one of the areas that still has the most unanswered questions out there right now. And so, you know, both the United States Treasury and the SBA on Friday, the day that the loan applications began, issued a interim final rule, 31 pages of information, but it didn't address a lot of the open questions about the forgiveness provisions, and particularly the questions that we care most about for our industry, that we know a lot of these businesses are currently either shut down or have very few employees, and are likely to be so through at least May 1st, right? So in that interim final rule, one of the things that they indicated is that there's going to be more guidance forthcoming from the SBA on the loan forgiveness provisions. So obviously that can't come fast enough. And a lot of folks, ourselves included, are trying to get better answers from the federal government, working with the National Restaurant Association, the American Hotel and Lodging Association, and others to try to get answers to some of those questions. But the short-term answer is we don't fully know exactly how those interplay right now. Bringing back all of your employees by June 30th, obviously, bringing back wages by June 30th is supposed to provide an exemption from those other metrics that you'd otherwise have to hit in the bill over an 8-week period, to have your employment, FTE employment levels as high as possible and wages as high as possible. But we don't have a firm answer from the federal government on exactly how that's supposed to work yet. So, the way that I read the bill is, even if you don't bring back everybody by then, you could get some forgiveness if you hit some of those metrics over that 8-week period. But with the current timeline, the latest you could start that 8-week period would be on May 5th. And we all know that, many of our businesses in Minnesota are shut down at least through May 1st, pursuant to the governor's order, or significantly limited. So we're hoping to get answers to those questions in the coming days here from the SBA. And we obviously need more guidance from them to answer those specific questions.
Yep.
Thanks, Ben. Our next question, Nick has offered to answer this one. It's also been uploaded a few times. The question is, we have employees that are asking for or applying for unemployment insurance benefits due to reduced hours. Those folks are still working, just working less. Will they get the unemployment insurance? And then will they also get the additional $600? And is that $600 prorated based on the hours that they're currently working?
Yeah, this is a really common question. And the initial part is, yes, they can still qualify for being underemployed. So if your hours are cut drastically, you are able to still get unemployment, at least a portion of it. And it's based on how many wages you still receive for the time you are working and your hours cut back. And the $600, we unfortunately don't know. I think it will be prorated, but that's where unemployment's kind of confused, that they haven't received guidance either. So for now, I would assume they will get a prorated percent of that $600, but don't really know, unfortunately.
Nick, we've got another question for you. If you are self-employed as an LLC and not able to do business, is PPP or unemployment the right path to take?
So good news is those aren't one or the other. The answer could potentially right now be both. If your place of employment is closed, and obviously you're the one employing yourself, but if you can't actually work due to the shutdown, exec quarantine, whatever, you could still qualify for unemployment under the new rules. So absolutely, if that's your circumstance, you should still apply for unemployment. The PPP would be a separate question, is when you get the funds, will you be able to use it for those designated purposes? And since you're self-employed as an LLC, LLCs can fall into so many buckets, it's a little convoluted to go into that, but assuming you're self-employed and you file either, well, I guess let's go with a Schedule C on your personal tax return, you could still get PPP funds. The application window for you opens up this Friday, the 10th. And we're hoping we'll have better identification and clarification of what you need to prove to show that you're self-employed and how much of the PPP funds you qualify for. But we don't really know. We're assuming it'll be 2019 tax returns so that they can try to see what your average monthly payroll would be, which would be essentially your take home after all your expenses. So a lot of it is we should get a ton of guidance this week. Whatever we tell you today, it's going to get clarified and changed by Thursday, I'm quite positive.
Chris, we've got a question for you. Can you have the part of your payroll that is still active, the partial staff, can that be forgiven in this current scenario, or do you need everyone to get any forgiveness?
Yeah, you can definitely have partial forgiveness. And I think the vast majority of situations are going to result in partial forgiveness, somewhere between 0 and 100%, I think is where most of them are going to end up landing. So say, for example, your average monthly payroll was 100 grand. So you get 250 of a PPP loan. And what we recommend is, and I don't think we've mentioned this, we strongly recommend you put this in a separate bank account. so
Oh,
that
that's
you
smart.
can account for these funds very specifically. So you've got your $250 sitting in a bank account. Maybe you spend the $50 on rent and the utilities and the mortgage, that kind of stuff. But you're looking at it and you're saying, well, I've only got half of my people on payroll. So you're going to have some costs that qualify, because maybe now you've got $50,000 a month in payroll costs. Those will qualify. So at the end of it, you got $250. You spent $50 on the rent and the utilities, and then you ended up spending $100 on payroll. You should have $100 grand left sitting in that bank account because you didn't use it. You do not want to use that money for something else. If you go buy a company car with it, or you go spend it on inventory, that is not an approved use, and the penalties for that can be more severe even than just having to pay back the money. So certainly at a minimum, you're going to have to pay back that $100,000 because that was not used for the qualified uses, but you still have the $100,000 because you didn't spend it on the stuff. So I think that's where, yeah, you're only going to have partial forgiveness, but you're only going to have spent partial use of the money. And so, I mean, it's slightly more complicated than that, but in the big picture, if you end up with 60% forgiven and you still have 40% of the cash left over, then owing it back isn't a big deal because you still have all that cash and you could just turn around and give it back to them. You don't have to pay them over the 2 years if you don't want to. And the other thing I would say is, just because you get approved for a PPP loan of $250 doesn't mean you need to take a PPP loan of $250. I don't think there's a ton of downside in taking the whole thing, but if you're like 100% sure that you're not gonna spend it all for reasons like that, then by all means you can take a smaller amount. The calculator is just to help you figure out what is the maximum that you could receive.
And then Chris, we've got another question for you, two actually, because they're similar. The first question is, if a business was founded in January of 2020 and therefore can't produce payroll figures from 2019, are they still able to, are they excluded from the PPP?
No, they can. There are rules around, you basically need to have been in business in February, and that's when they measure it. So there are alternative rules that exist for new businesses founded like in the middle of the year in 19 or even in January of 2020. So there are separate rules, separate calculations for those folks. They can still get the PPP. There's also separate rules around some of the very seasonal businesses. Those calculations are very complicated, as if the other ones aren't. But so there are some special carve-outs for seasonal, which allow you to measure the payroll during different time frames, so that you get a more appropriate answer.
Okay, and that actually was the second question. You're a step ahead of me. I love it. Okay. There's a person on the call today who has a hotel that they purchased in August of 2019. They'd like to use their payroll through the year end of 2019, but they're not sure if they're required to also include January and February of 2020, because if they do that, that kind of changes.
Sure. So there can be some options, and you'd want to look at the different options for seasonal businesses, but those calculations can be very challenging to figure out, but certainly they're looking at an average monthly. So if you're only in business in like August to December, I think one of the options you could use is just to look at those 5 months and take that average, and that's what you use in the calculation.
Chris, I think that second half of the question was not so much about the seasonal, but somebody that's got a new business. So that would be a separate calculation, correct?
Yes, but they may, if they're also seasonal and new, you might be able to look at the seasonal one, because those are always an option. You can look at the seasonal stuff as an option, but you don't have to do it. So yeah, it's really diving into the details and seeing what what options you have to choose, because oftentimes the banks are not great about explaining your options necessarily. Some of them have elaborate calculators that take those into account, and other banks just don't seem to understand necessarily all the choices that you can make so that you're getting the maximum allowed.
Just a quick answer. Some folks have asked if this will be recorded and made available later, and it will be. Look for some info from Hospitality Minnesota on that. Another question is, in terms of applying for the EIDL loan, which tax forms are needed? Is that personal returns from the owners of the business, or is it the business's tax forms?
For the EIDL, it's definitely the business tax returns, and they are going to ask for the most recently filed, which if you haven't done 2019, that should be just fine. You can go back to 18, and then they're going to want your 2019 internally created financial statement. Also a plug, if you're that far behind, time to get caught up, because they're not going to take it if you don't at least have 2018 sitting around from what I've seen. And they are going to ask for a tax form that I briefly mentioned called the 4506. That is them going straight to the IRS and getting official tax filings on the business and the personal return of people owning over 20%.
Chris, we've got another question for you. And that question is there a worry that the funds will run out given the strategy of waiting to bring folks back on and the timing of that?
So I'm not worried about the funds running out at all. Certainly some people have expressed that fear, but I think they've tried to create the pool of money. They did some calculations going into it to calculate exactly how much would be needed, because they know how much payroll occurs. So on the front end, they thought they made the bucket big enough. And on the back end, both the president and a few of the senators have said, hey, if we run out of money, we'll just throw in more money to this program. So they have no intention of letting this dry up. So I'm not personally worried about it. If they run through $350 billion and they need another 100, I fully expect it to be sort of re-upped.
And then we've gotten a few variations of this question, and I apologize if we've already addressed it, but I'm going to ask it again. Do the funds need to be used by June? Do the PPP funds need to be used by June 30th to qualify for forgiveness? And then what happens if businesses are not allowed to open due to various orders from the governor?
So it appears, and we're still doing some digging on this, but it appears that the PPP loans need to be applied for by June 30th, but the money does not need to be spent by June 30th. So it appears that when you get the money, starts an 8-week period, and there's no cap on the back end on that 8-week period. So what I'll say is I think it is possible that you could apply for and receive a PPP loan June 15th and start an 8-week period then. The other side of that is if you did apply for a PPP loan and you got it like May 1st, and then your 8 weeks is up and your business is still not open, if you haven't brought people back and started paying them, then you should still have all of that money, because it should be segregated in a separate bank account. So that's the way to sort of cover yourself is I'm gonna separate this money, and if business doesn't reopen, then I haven't spent it. And so it's not a big deal if I owe it back to him, because I still have all of the proceeds from that loan.
Okay, next question is, this person says that their staffing uses summer J1 work and travel students for housekeeping and guest services. We don't staff from October to mid-June. if we deferred applying for a PPP loan, if it even makes sense for them. If they deferred applying until before the June 30th deadline, knowing that those summer employees usually arrive between June 10th and June 15th, are they still eligible to apply? And then for them as the business owners, they said that they usually start paying themselves in June or July when cash flow increases. So being self-employed, can they also get assistance for their own income?
Yeah, I'll jump on the first part of that. So one of the requirements is that the pay has to go to a U.S. citizen or resident. So I have some clients that employ people in Canada and the U.S. The Canadian wages do not count for the PPP. It doesn't count for the calculation going in, and it also doesn't count on the forgiveness side. I would have to check on some of the visas, but in general, if those are non-residents, my guess is that the wages to them don't count in the first place. So I would be very careful with that. There are a lot of restrictions on the money ending up in the hands of basically non-US residents.
Nick, our next question we'll send to you, and that is, can you get the PPP loan if your business is operating on a partial schedule and partial staff rather than fully closed? Do you have to be fully closed to be eligible for the PPP loans?
You definitely do not have to be fully closed. Sorry, we've probably been saying that because so much of the demographics are at the moment, and so no, definitely don't have to be. Part of the PPP loan is you do have to certify you were affected, by COVID. I can't imagine anyone in this client or in this webinar or in the Hospitality Minnesota attendance that you couldn't certify that, because all of you have. So there's a few certifications you have to make, but definitely don't have to be fully closed. Partial is just fine, even if you're still running, but maybe your future has gone dipped, your future bookings or reservations have dropped, you could be partially harmed. So no, that is not a direct requirement at all.
Okay. And then Nick, the next question for you is, how can a PPP loan be delayed if it's already been applied for?
And that one, first, quickly reach out to your banker. Friday was the first day that you could apply, and the website was down for a lot of it. So depending on who you went with, they might not have even sent it in yet. So talk to them. If they did already send it in, you're kind of stuck waiting until we hear back from the SBA, which we have no idea the true length of time that will take. But once we find out, I'm really hoping once they present you with an offer that maybe you have a little leeway in when you take it. There's no actual written guidance in the CARES Act around these loans saying either or. There's a lot of people that believe it'll be needed to take right away, which I understand, because that's the point of this loan, is to get money into people's hands as soon as possible. So unfortunately, that's a little bit of a wait and see. And maybe we can push it back a little bit, or maybe you'll have to take it and then deal with partial forgiveness, or just paying it all back into the program so that you don't end up on the hook after this when your loan is not forgiven. So unfortunately, it's case by case.
If I could add something to that too, Nick. So one of the things that we're advocating for, and I know the National Restaurant Association and other federal partners are asking and advocating for, is that although you might apply for a PPP loan today, that you could potentially push the origination date of the loan and then therefore your 8-week covered period further into the future. So we're looking for more clarification on that. And then just to piggyback on what Chris was talking about earlier on the June 30 deadline, in terms of having to make exhaust all the funds by June 30, we agree that it doesn't seem that that is a requirement in the current bill text. In terms of whether you could start the 8-week quote unquote covered period later than May 5, I think that's still a very open question that's being interpreted differently by, different smart minds around the country right now, and something that also needs to get fleshed out by the SBA in the coming days. I've seen many interpretations that, indicate that you have to have completed your covered period, that 8-week covered period, if that's what you're going with, by June 30. So again, I wish we had better answers for you on that here today, but no one does yet. And so we're going to keep working on that, and hopefully the federal government will be forthcoming swiftly.
Agree. And just a very good, perfect plug for why you have associations and why you're members is this is so vital that you have somebody fighting for you, because they're trying to help small businesses, especially ones that are closed. They desperately are trying to help all of you, and they didn't realize in their writing that some of this just wasn't quite right. We don't know in Minnesota when we'll be back open and when everyone's going to be finally back at restaurants, hotels, and resorts and campgrounds. So I think their intent is to help you, and yeah, just please keep submitting and lobbying to all of your senators and reps to get that change, because it really hurts us. And I know I work with the Brewers Guild closely, who was saying the same thing, and they're close partners with Hospitality Minnesota. So just thank you for being a member, because that's huge.
We got one last question and then we'll wrap it up. So that question is, if I take a PPP loan and don't use all of it, do I still have to use 75% of the total loan amount for payroll in order for any portion of it to be forgiven?
Sorry, I'm having to reread that. Chris, if you got it right away.
I think the answer to that is yes. You have to, the new guidance and the new rule that has come out in recent days here indicates specifically that you have to use 75% of it for payroll in order to have it be forgiven. But feel free to jump in if you guys have a different take on that, Chris or Nick.
Yeah, I mean, my take on it would be that there's a 25% cap on the non-payroll costs. So that's the rent and the utilities. I think how that works in a situation where like half of the funds didn't get used at all is still up in the air. Like if you had $250,000 loan, so 25% of that is going to be $62,000. What if you didn't spend half of it? Are you looking at 25% of the original PPP amount, or are you looking at 25% of what actually got spent on stuff? So I wish I knew more, yeah. But it should be. I mean, a lot of these things are being clarified sort of on a daily basis. It's just a little bit of a drip, drip, drip of information from the SBA. So I would say just be sure that you're only spending it on things that qualify, whether the rent or the payroll. If you spend too much on rent, at least you spent it on the right thing, and that's okay. But then, yeah, you're not going to have all of it be eligible for the forgiveness.
And we will obviously be advocating going forward that 75% to 25% ratio, would apply only on money that's used and not on money that's returned. And that makes sense. I would imagine that that's what they'll ultimately land on, but we will be pushing for that, obviously.
Agree.
All right, well, thank you, Nick and Chris and Ben, for being with us today. Hopefully everyone has gotten some helpful information and is feeling prepared to apply for their EIDL and PPP loans. We at Hospitality Minnesota will get this recording out in the next day or two. But in the meantime, if you're still on, Nick and Ben and Chris's contact info is on the screen if you have questions for any of them about any of this information. Thanks, everybody. Have a good one.
Thanks, Emily, and thanks, Chris and Nick.
Thank you both.
Yep, no problem.